Hi, I'm Jumpstart and basically we're going to talk about something very important today. The effects of US Fed rate hike on Indian economy. Phew, I have a serious topic in hand today. Economy and terms like Fed rate. What is Fed rate? Fed rates or federal fund rates is the interest rate at which depository institutions lend reserve balances to other depository institutions overnight on an uncollateralized basis. Nahi aai samajh? Basically, every country has a central bank. Like we have Reserve Bank of India, US has the Federal Reserve System. And recently, the US Federal Reserve has raised interest rates by 75 basis points for the second straight month. The Indian stock market and its obsession with the US Fed is a prolonged saga. Every time the Fed releases domestic macroeconomic data and interest rates, the Indian market and market participants keenly scrutinize the proceedings amidst the markets being volatile. So, why did the Fed increase interest rates? And what does the interest rate hike mean for RBI's upcoming policy review? The US Federal Reserve has raised interest rates by 75 basis points for the second straight month. This will keep global financial conditions tight in the coming months and may result in the flight of capital flows from emerging markets like India. This will keep the rupee volatile in the near term. A depreciating rupee will put pressure on inflation too due to higher costs of imported goods and services. But for a person like me, the first question is, what is US Federal Reserve? The Federal Reserve System is the central banking system of the US, just like we have Reserve Bank of India. Why did the US Fed increase interest rates? According to an article by the Times of India, global economies are in a recession due to high inflationary pressure. To combat this, the Fed is taking aggressive steps such as increase in interest rates, something which was not seen since the 1990s, to reduce the money flow in the economy. How does it impact India? According to Times of India, when the Fed raises its interest rates, the difference between the interest rates of India and the US narrows. This is making emerging countries such as India less attractive for the currency carry trade. And since India is vulnerable to US rates, it could lead to capital flow out of India, depress the Indian rupee further, prolong imported inflation, and prompt more domestic rate hikes. The RBI is expected to hike rates by 35 to 50 BPS. BPS is mostly used to indicate the changes in interest rates and also bond yields. The RBI will need to ensure that there is an interest rate differential between India and the US to attract dollars at a time when India is expected to witness a record current account deficit. So basically, economy ke अच्छे दिन तो seems to be still far away. But what you have near you is our videos. So enjoy them all. पैसे थोड़ी ना लगते हैं. Let us know your thoughts in the comments. Thoughts about that silly question only, कि पैसे थोड़ी लगते हैं. That's all for today. To watch more videos, don't forget to check out our YouTube channel.